Adam, how are you today?
Good. Thank you so much for having me on the show, Christian. It's
Of
nice to be
of
here.
course. Thanks for joining us here on the Executive Edge podcast. We have Adam Gower from the Gower Crowd platform. And Adam, you do a lot with technology. You do a lot with the digital world that we're currently living in. Can you tell us, a little bit about Gower Crowd, what you guys do, and what brought you to where you're at today?
Sure. The short story, to keep it short, I've been involved in commercial real estate all my career. So actually over 35 years, so a long time. I've acted in senior positions in institutional investors, institutional companies, public companies, private companies. I've run my own development shop as well, ground up development in the LA area. But in the last 10 years, what I've been doing is focusing on capital formation for real estate sponsors. So, real estate professionals need two types of capital. They need debt, which they get from banks, and they need equity, which they get from individual investors. And historically, it was a very laborious, time consuming one on one process to raise capital because you had to meet people. Regulations prohibited what's called general solicitation. So you couldn't advertise. In 2012, that changed, but allowing for advertising. But most of the people in the industry have got no idea how to market their businesses online, right? Especially for capital formation, because it was prohibited. So what we do is we build best of class digital marketing systems for our sponsors or for our clients so they can find more investors and raise more capital faster than they've ever done before. That's the core of what we do. But inside that, we implement best of class uh, um, strategies and tech. And so, of course, we also spend a lot of time with AI. So we're integrating AI across all aspects of what we do for our clients, and we've started to provide different services that are very specifically focused on AI integration into the commercial real estate world.
That's really interesting. And that's also cool that you're moving the money raising from a one to one to a one to many, right? Based on
Yeah.
those technologies. I'm curious, when it comes to AI, I mean, with it being so new, how are you really, integrating it in a, I guess, for lack of a better term, a useful manner, right? Because there are so many ways that we can use AI, just from like the news highlights or talk to ChatGPT or kind of using it in the background. But how are you taking that technology and really bringing it to the forefront to, get in front of more people, to talk to more people, and to really further what the sponsors that you work with are trying to do?
Okay, so there's a couple of things. First of all, the core of our business is, as you mentioned before we started, content production. So I'll give you a couple of examples. So typically, what we do is I interview my clients over a period of 3 to 6 months, depending on how long the engagement is or the initial engagement. And from those conversations, we create articles. From those articles, we create social media posts, we create videos. And so out of a single 45-minute call, we might produce 20 or 30 pieces of content that go up on the website, go up on YouTube, go up on social media, and help to expand the visibility of our clients so that they can, attract accredited investors. So accredited investors can find them, get to know them, and eventually invest. Okay, so how do we use AI? So there's a couple ways that we do that. I was speaking to a client yesterday who has for whatever reason, so he actually specializes in raising capital from overseas. So it's unusual. And he said the vast majority of his clients come from Vietnam and Korea. South Korea. So he doesn't speak either language. So what we're going to put in place for him are videos of him actually presenting his value prop and is educating people on what he does and soliciting from them in English, but we will convert those into perfectly translated, lip synced, like it's him speaking in Vietnamese and Korean.
Wow.
And we can do that over, there's dozens of languages that you can do that with. So that's huge, right? It's got right there. He's going to be able to communicate with his perfect prospects in their
Yeah.
language for the first time. The second way we do is actually, so when I record these, like you're recording this,
Sure.
we take the videos and we create short videos, and we put them on YouTube and on the website and on social media and et cetera, et cetera. So one of our clients is amazing. Guy is super high integrity, very, very bright, but an exceptional sponsor. He's a very successful guy. And when you're talking to him, he's completely fluent and articulate and really interesting to hear. But as soon as you hit the record button, he starts to mumble. He can't do it. He starts by, can I say that again? No, I said that wrong. And he just overthinks it completely. So it's totally hopeless. I spent weeks trying to put him at ease. Very difficult. The only way to do it is to surreptitiously record him. But I can't do that. These are Zoom, you are being recorded or something. You
Yeah.
can't do it. So we created an AI avatar of him. It's an exact replica of him. It uses his language patterns. We use basically what he tells me. We create scripts, so it's authentically him,
Hmm.
but it's an avatar. So when you watch it, you hear his voice, you see him talking like I'm talking, but
Hmm.
it's not him. It's an AI avatar. It's totally fabricated. But it's really his thinking. It's not like he's saying things that he shouldn't be saying or making things up. It's his thinking. It's his philosophy. It's his thesis that he's expressing. But it's an AI avatar. So those are two very simple ways that we use it in the current workflows. But what we're also doing is we are expanding our services to help clients accelerate other parts of their business in the same way as we help them to raise capital. So, one of the biggest sides, or one of the biggest aspects of real estate, one of the most important things is finding opportunities, finding deals. And it's really difficult. I mean, there are thousands, tens of thousands of opportunities. And the way that typically the professional shops that we work with do their acquisitions is they'll create their own pipeline, one way or another, of deal flow. And the acquisitions team will scan those pipelines and they will reject 90% of them. 10% they might think a warrant further investigation, maybe even fewer. But let's say 10% are worth looking at in more detail because the high level screen said, yeah, there's something here. Don't know what, but we're not rejecting it immediately. Okay. At that step, what they do is they take out typically extremely complex underwriting spreadsheets, typically in Excel, that might have 24 tabs on them and all kinds of macros and you name it. I mean, incredibly sophisticated proprietary analytics in an Excel spreadsheet. So they'll put their acquisitions team will pull that out. And then they go to a data room. So on a deal that they like, they'll say, okay, send us more info. So the seller will send more info, and that info might have rent rolls, it might have tax records, it might have or tax history, it might have utilities and other expenses, and usually they're huge data rooms with masses of information. So what the sponsor will then do, or the acquisitions team, is they will manually and they will go through the data room. They'll look at all the call it the rent roll and they'll pull the numbers out of the rent roll manually. and take those numbers and input it into the exact right place in their Excel spreadsheet, in their underwriting spreadsheet. And once they've done that, they can now run their model, right? So they can run their model and understand how all these numbers actually work according to their underwriting model. But that process of inputting the data into their spreadsheet is prone to error because there's humans involved, and it's extremely time consuming and cumbersome. So
Sure.
what we're also doing is consolidating, is mapping their spreadsheets and using AI to auto-populate all of the relevant cells with everything that's in the data room. So instead of spending a half day to crunch numbers or to drag these numbers over or to data input, manually put these data in, we can do it in seconds, where we populate your spreadsheet with all the information from the data room. Plus, we can enhance that data. So we can also add third-party comparable data. So what you get back is you get a spreadsheet that is fully populated with all your target assets, information, rent rolls, and whatever else there is in there, but that also provides you with up to date comparable data so that you can see how it compares against other similar properties in the area. So it speeds up the process from what can take hours, even days to do, into literally minutes, just super fast. So what that means is that our clients are able to screen many more deals than they might otherwise be able to do. So they can buy more, and it's an incredible competitive edge.
Wow. Yeah, that's
Evolutionary,
incredible.
actually. Yeah.
That's incredible. You're getting them out there, you're getting them the recognition, you're helping them raise the money, and then at the same time, you're also helping them find those viable deals. Now let's change topics a little bit as we're going from kind of your workflows and what you're doing to help these investors to the overall real estate market,
Hmm.
right? What are you seeing, over the past, let's say 6 years, right? We had COVID, we had, basically free money, we had the rising interest rates, we had everybody doing syndications in the last run, and deals being very hard to pencil, to now rates rising, owners wanting the same prices they got when rates were 3%. I saw you posted at your on your LinkedIn. You tell a lot about a sponsor for the deals that they don't buy, right? So what are you seeing, macro hindsight and, basically with what was in the market then, what's in the market now? Are there more deals coming? Is it harder to come by deals? Kind of how are you putting all of those things together? Of course, aside from the help of your technology that you're putting in play as well.
Yeah. Okay. So the macro perspective is that there was a bubble of activity during the ZIRP period, zero interest rate period. And so what that did was it attracted a lot of novice sponsors being a professional real estate investor, somebody who does it for a living. And these folk went out and they bought properties and they overpaid. They didn't have the experience. Investors didn't know they didn't have the experience. They were very good at marketing, so they were able to raise a lot of money. And then when interest rates started rising, and at the same time costs started to go up as well. So insurance costs, renovation costs, across the board, basically costs went up. So you got costs going up. You got pressure on interest rates, so your debt burden is going up, and also you've also got downward pressure on rents as well. And so what you found was a lot of these deals failed, and so a lot of sponsors are really struggling, kind of the newcomers to the industry. And a lot of their investors are very upset because they've been promised the world and now they've lost their money. However, that's this kind of new group of people that have come into the market. My clients are typically what I call multi-cycle seasoned professionals. They've been through this kind of thing before. They're not new to the industry. They went through the global financial crisis. Some of them went through the savings and loan crisis in the 90s. They know what happens when the market turns, and they know that the market always turns at some point. And so what they do when they underwrite is they don't want to lose money. They are in it for the long run. They know that if you can survive a downturn, you will come out the other side even stronger and even more successful and even richer and financially successful. That the value of your properties may go down, but if you survive a downturn, they'll come back like gangbusters, basically. So my clients are much more discerning. They're much more careful. They understand that real estate is actually extremely high risk if you don't play the game properly. And so they're very conservative in their underwriting, and they are very conservative in how much debt they put on a property because they don't want to lose them. So what you're finding today is the very, very early beginnings of an upturn. So we are bumping along bottom at the moment. There's a lot of deals that are hidden from view for various reasons that are in terrible distress. And they're going to be lost to banks or but basically be lost to foreclosures or forced sales, losing investors their money. But it's coming on very slowly. Those deals are appearing. Our clients are finding deals that are at very significant discounts to what was paid for them previously. And so, ever so slowly, they are beginning to buy again. We have clients that have done no acquisitions for years, 3 years, 3 years. So our job is just to maintain relationships with their existing investors, to nurture those investors, to keep them appraised, like answer the kinds of questions you're asking preemptively, to
Sure.
explain what's going on in the market. This is why we're not buying at the moment. This is what we're seeing. This is how the current portfolio is going. This is our view of the economy, etc. And when the time comes, their networks will be prepared for investing again.
Sure,
Yeah.
sure. That makes it absolute perfect timing to come in and do what you do, right? Get their content, get their voice out there ultimately, and build that know, like, and trust factor with their clients and their target avatar.
Yeah, exactly. That's right. They are they're patient. This is patient money. They know that I spoke to a guy the other day. Of course, I won't mention names. It would be terribly indiscreet. And he said that he had some deals that had done really badly. And so I asked him, well, why did you do those deals, right? Why did you do them? And he said, I fell into the trap. I fell into the FOMO trap. I could see everybody else buying deals and making money and charging fees and raising capital. And, everyone was super active because interest rates were so low, money was plentiful, banks were lending, investors were around. And so the mistake I made, he said, was not wanting to stay in the game, even
Hmm.
though the numbers didn't make sense. So we pushed our numbers, he said. We borrowed more than we needed to. We made assumptions that were more aggressive. And as a consequence, he's now losing properties to the bank.
Yeah,
And
yeah.
so that was patient. You got to have patience. Then I have another client who who had a $1 billion portfolio, and he was trying to find new deals. And he said, yeah, we couldn't find anything that made sense. Everything we looked at was being overpriced. People were paying way more than we could make sense of. Made no sense. We couldn't underwrite. So, like, how are they coming? How are they underwriting and paying that money? It's like makes no
Yeah,
sense. And so
yeah.
they decided, okay, we can't find anything to buy. maybe it's time to sell. And so he decided, well, we'll sell. So they bundled up $700 million of portfolio, sold it as a portfolio. So you get a premium for that. So you got a premium for the
Hmm.
portfolio. And almost immediately afterwards, interest rates started to go up. So he exited at exactly the right time. And he's been sitting on his hands now for 3 years. He said,
Hmm.
we look at deals all the time. Just now, we're starting to see deals that make sense and buying at incredible discounts. But those, you know, excuse me, when you buy a distressed deal, it's distressed for a reason. And they're tough projects. You've got to really know what you're doing when you buy a distressed deal because as soon as a sponsor stops paying their bank, right? They stop because they haven't got the cash flow. So they stop paying on the debt and they move into the default periods and 90 days and they move to foreclosures and then in negotiations. They also stop maintenance work. They start cutting costs everywhere.
Yeah.
So hidden inside distressed deals are all kinds of problems that wouldn't have otherwise been there because the current owner stopped spending on the property. So you have to be exceptionally good at property management. You have to be exceptionally good at your due diligence when you go in and look at a property. And you
Hmm.
have to remain strict to your underwriting to be successful with distressed deals. But we're stuck. But that what this one client was telling me was that he's starting to find distressed deals after 3 years of sitting on his hand. No deals.
Yeah.
Right? His investors are hungry. He's made a fortune for his deals, for his client, for his
Hmm.
investors. And they're hungry. It's like, what have you got next? We want to invest with
Yeah.
you. And he's telling
Yeah.
them, and this is a temptation that you can fall into. Well, we've got all this money out there wanting to invest. Let's just buy something and use it. And we'll charge fees,
Sure.
right? We'll make money. But he's been
Sure.
sitting and just waiting. So you know what's going to happen. His first deal, he's going to put it out there. He'll finance those super fast because his investors know that he's a careful investor. In
Yeah.
contrast to the other sponsors, the other people out there who have lost people's money, have lost
Hmm.
investors' money, they are currently having a very hard time trying to raise capital.
Sure. Yeah, that makes sense. And that's, what separates good underwriting from people who are just kind of, I guess you could say fly by night, right? Just follow the
Tourists,
trends.
we call them
Yeah,
tourists.
tourists. They see
Yeah.
2% interest rates, everyone jumping in. They jump in at a 2% cap rate because they think it's going to stay that way forever. They think the rents are just going to continue to rise, occupancy will stay there, and there's really nothing on the other end of that deal except for
Well,
upsets,
they make
right?
fees, and that's the challenge is that you've got when if you're an investor, passive investor, an accredited investor looking for places to invest, you got to know what to look for, and
Hmm.
a lot of it is it's subtle. The signals are subtle.
So I guess with that said, what's for somebody who is or might be an investor, right? What are the biggest risks in, crowdfunded or, investing in these deals, right? Trying to find a sponsor that's good and that knows what they're doing. Like, what should somebody be looking for when, looking to get into this business or industry as an investor?
So I would say there's a couple things. One, you want to make sure they have multi-cycle experience, that either the company or the people running the company have been through this before. Ideally, they've been through the global financial crisis, the GFC of 2000, what, 8 to 12, whatever period you think that was. So you want to make sure they went through that first. They've been there, they've done it. You also want to look at how they underwrite. And if all they say is we use very conservative underwriting and our projected IRR is 28%, walk the other way because nobody's doing conservative underwriting and getting 28% IRRs, right? It's just in this market doesn't exist. So that's two things. The other thing you want to be watching for is levels of debt. How much debt are they taking on? And making sure that the sponsor has underwritten risk to accommodate a worst case scenario. So sponsors should be running three scenarios: best case, worst case, and most likely. what they present to investors is most likely. If it goes really well and the economy booms and everything, just all the planet, the stars align, then this is what a home run will look like. But if we go into a downturn that was as bad as the GFC, we will survive it. And if you underwrite to a worst case scenario and are still able to buy a deal, your projected returns are going to be modest relative to somebody who is not doing that. And one of the biggest mistakes that investors make, passive investors, accredited investors, is they think that the internal rate of return, the IRR, is the lodestar of success, right? It's like the only thing you need to look at. So we see this a lot. We see investors crowding around deals that have 25% IRRs and passing on deals that have a 15 to 70% projected IRR because their theory is, well, first of all, I want to make 25% a year, right? And they're in their minds thinking, all right, so I invest 100 and in 5 years I'll have 200 and I'll have made this and I'll be a lot richer. And, what car will I buy? Right? So they're already spending the money they're going to make. And they look at the other one and they think, so, okay, this guy's projecting 25%. If he misses, he'll hit a 15 to 17% IRR. So I'll get from this guy projecting 25%, I'll get the 15 and 17 that this guy is projecting today. So I'll get there
Sure.
anyway, right? And
Sure.
that 15 to 17, he's going to end up at a 5 or something, right? So both of them
Hmm.
are going to, it's not how it works. What's going to happen is the guy that's projecting the big numbers, he's going to lose everything. And you will go from 25% IRR projected to zero. Sorry, the bank took the property back.
Hmm.
The guy that's underwriting to prudent numbers, to risk mitigated, worst case scenario numbers, he's going to survive.
Hmm.
He might tell you, with distributions are down because rents are down or something's happened, but
Yeah.
we're holding on to this property. You're not going to lose
Hmm.
your money. You might not make as much as you did before, but you're not going to lose it. Those are the guys that you want to be investing with.
Sure. Got it. So, what kind of are you seeing in the investor sponsor relationship, right? Especially again, considering you take people online, you get them in front of a bigger audience. It obviously differs from that old school one-to-one approach. I think I read something how one of your investors never spoke to, or
Mm.
one of your sponsors never spoke to the investor, right? So how are you establishing that relationship from afar, I guess you could say,
Yeah, so
and
remotely and
building
online.
that trust most importantly?
Yeah, so look, it's how you buy anything, right? You go out and buy a car, you don't speak to the president of the company and ask him about it,
Hmm.
right? You don't do that. But how do you do it? You consume information, you do research, or a vacuum cleaner, right? You don't go and call the president of Hoover. I don't know if Hoover's even around these days, but whoever it was, right? You don't do that. You do research. And so what we do for our clients is we help them preemptively answer all the questions that their investors likely have before they have any contact with the investor. So the first thing that's going to happen, like if somebody, I'm just going to do this in the background here while we're talking. If you run my name, Adam Gower, on Google, the first thing that shows up is my website. And the second thing that shows up is LinkedIn. So that's likely to happen to a sponsor. Somebody's going to do research. They hear that somebody shows up on your podcast, and and a listener says, "All right, who is this guy?" And they look him up. Their website and LinkedIn are the first two things that are likely to show up. Right? That's what's
Hmm.
likely to show up. So what you want to do is to make sure that those resources that inevitably your prospects are going to find immediately are fully stocked with every answer that you want them to have about everything that you do. So that when your prospects are doing research on you, they find that You're preemptively answering all their questions and you establish a relationship. They get to know, like, and trust you without any direct contact. They become predisposed. I mean, there's more to it than just LinkedIn and your website, but
Sure.
basically, they learn about you and they become predisposed to investing with you before you have any direct contact with them. Here's the thing: it used to be that you had to do it one on one. That's incredibly time consuming, not scalable. Accredited investors are, by definition, high income earners, successful, often business people.
Hmm.
95% have degrees, advanced degrees, or professional qualifications. They're very well educated. They're busy people. They have families, right? They've got, they don't have time to sit down for an hour and be pitched with a sponsor, especially if they're diversifying and they're looking at multiple deals to invest in. They don't have time to do that. Book a time, call them, book a time, on a schedule, on a calendar, show up, maybe have to cancel, book again. No one wants to do that, and sponsors don't want to do that. Instead, if you do it right, he said, waving his phone as a prop for those that are listening and not watching this video. They want to be able to research you on their phones or on their desktops. And they establish a relationship with you. They get to know you, they get to know, like, and trust you. And they get to, and then they sit patiently waiting for you to pitch a deal to them. And when you do that, if you do that in the right way, by creating a seamless workflow from here's the deal to here are the documents and the wiring instructions, if with a webinar and some emails in the middle, if
Hmm.
you create a workflow that is super easy for your prospects to go through in order to invest with you, there is no need to have direct contact. They don't want it. Nobody really wants it. You can satisfy everybody's questions uh, um, by setting up your website, your online presence effectively, and on a deal in one webinar and a series of emails. And then you are soliciting investments from many people instead of one at a time. What you said, one to many instead of one to one.
Hmm. Sure. And that makes total sense. And it's still, like we were saying earlier with real estate being very traditional, it's still a very new theme, right? To kind of do that one to many, to do that marketing, to do that content in the sense of getting in front of those people and not having to have that conversation. With that said, and with, things speeding up and going faster and faster every day, every cycle, what do you think that's going to do with trust, right? Because now, again, not many people are doing what you're doing or are helping people like this. But let's say in 5, 10 years, the amount of sponsors that are out there is going to 10x or 5x or whatever that number is. Do you see that more broad approach lasting, or do you think it's more of a trend that we're in now? Because again, the barrier to entry is still a little high in a sense that not many people are doing it.
Well, not sure that not many people are doing it. There's certainly a lot of people already marketing online, and you've got to do it. I mean, there's no option. It's mandatory. People, you've
And
got
when
to
I say
have.
that, sorry,
Mm.
when I say that, I mean in a sense of raising money for real estate capital
Yeah,
specifically.
mandatory. You have to be online. If you're not online, you're invisible, right? If you run a search in Google, how can I invest in real estate? Your competitors are going to show up. If you're a multi-family apartment shop and somebody says, what's multi-family, right? And they don't even know that term, somebody else's article is going to show up and they'll go to that website and they'll read that article and they'll establish a relationship with that person, not with you. Everything is done online. It used to be that you would have to, I mean, it's a bit of a cliche, but you would join the country club where you would meet other wealthy people, find out what they do, engage in business. And if it's a real estate guy, you might invest with them. How else do you meet people? Through referrals, through your CFA, through your accountant, through your attorneys. It's just a laborious, slow, non-scalable process. So to be effective, you have to be online. How can you not be? It's like having no website. How do you do business without a website? You can't. It used to be that that was the man. Okay, look at the evolution. The evolution was, I think, if you really go back in time, calling cards, then business cards, right? You'd meet somebody, you'd exchange a business card. Then the internet came about. You got to have a website. So the early 2000s, everybody got websites. Most of the people that I deal with have websites that look like they were built in 2000. It has no function, almost no
Hmm.
value, almost no more value than a business card has. So now your website, you need to be a mini media company. It doesn't mean you need to spend all your time producing stuff. We do this for our clients. It's actually not that difficult to do. And once you get a rhythm, it's quite easy, it's creative, and it's interesting. So you end up spending and so you got to have that. I mean, it's like a mandatory, as AI will be a mandatory tool and is increasingly becoming a mandatory tool in order to stay ahead of everybody else. If you don't use AI today, even if for rudimentary uses, you are spending a lot more time doing the same thing as your competitors are doing when they use AI. So it's just, you've got to use it.
Sure. Yeah, and that goes perfectly into what I was going to mention last. Like, what do you think the hardest lesson for sponsors and investors that they will have to like internalize for this next big real estate pivot? But it seems like the fact that they inevitably have to be online, they have to be building that content background, that engine, that machine that will produce for them without having to be there.
Sorry, so what's the question?
What the hardest lesson for
Oh,
sponsors and
hardest lesson?
investors
I think
moving into
making
this
the
next
leap.
real estate
Yeah,
pivot?
yeah, making the leap. You've got so most of the people I talk to are multi-cycle seasoned professionals who are my generation basically. And there's a resistance. I mean, you can see it with AI. I speak to people, it blows my mind. Speak to people who say, "Oh, I'm not touching that. I don't trust it." Fuck.
Hmm.
Oh, excuse me. Like what, that you've got to be kidding me. Yeah, so I was actually I was speaking to a screenwriter. I'd written a post on LinkedIn that I used ChatGPT for. I forget what it was about. Candidly, I forget. But I prompted it to employ some of my humor, right, and help me make a humorous post. It was hilarious. It was very, very funny. And I tweaked it a bit, prompted it, got it exactly the way that I wanted. It was very funny. So I spoke to this screenwriter and I asked her, okay, so what do you do? Like, what's your business? She said, I write comedy for television. So I said, "Oh, well, how much? Like, how much are you leaning into AI for that?" "Oh, I'm not touching that at all." She said, "AI has no sense of humor." And I just looked at her and I thought, "Okay, you are going the way of the dodo. You are not going to be employed very much longer." I mean, I didn't say that to her, but I just thought, "You're avoiding this tool. You're out of your mind. It's so powerful. Everybody else is using it. If you don't use it, you're just going to be done." Really, the best application, the best thing that you can do is to become an expert because there aren't
Sure.
that many experts. It's like anything, I'm kind of prattling on a little bit now, so stop me because I won't stop. But one of my sons asked me, he said, "Yeah, look, you can ask AI to create a beautiful, uh, Renaissance painting for you of something, and it will create something that's absolutely stunning on the screen,
Sure.
right? And a bit of time to do that." Okay, that's true. So he said, "So how does if AI can do that, what happens to all the artists?" Right? Now
Hmm.
AI can do this. Okay. So my response to that is true, but when Rembrandt painted or Van Gogh painted or any of the, the great painters, what did they use? They used a palette with a range of paints on it with different colors. Well, those palettes of paints have been available for hundreds of years. Okay.
Hmm.
So why isn't everybody a Rembrandt? Why isn't everybody painting the most beautiful things? Why? Because you have to know how to use the tools. You have to have a creative mind. You have to have vision for what you want to create. You have to have the skills to be able to use the tools in a way that make you stand out from everybody else. AI is no different. The
Hmm.
tools are there. The use of the tools is complicated. They're not easy to use, actually, to the extremes. Only
Sure.
true subject matter experts, real experts, can use these tools in a very, very powerful way. So new industries will emerge from this. And now we're going down the AA path, so we shouldn't really do that. But
Yeah.
you want to be adopting these tools because one, you can. They're not that difficult to use, and because most people are not using them, just a little bit of effort will put
Mm.
you ahead of everybody else.
That's a great sound off right there. I love it. So just to finish up here, Adam, what does the next 6 to 12 months look like for Gower Crowd? What are the goals for the year? I know it's January 28th here
Mm.
today. We still have most of the year in front of us. So what are your big milestones for this year? And what are some maybe challenges that you're facing and trying to
Mm.
overcome?
Okay, good questions. Definitely scratching my head about that actually at the moment. So there's a lot of opportunity in distressed real estate, and I want to actually start pivoting to actively. I don't normally actively raise capital. There are a lot of securities regulations that you got to be very sensitive to. So I don't normally do that. I help people raise capital. This year, I'd quite like to start actively raising for maybe some of our clients because they're exceptional professionals with good experience and because they're digging up some amazing deals. So I want to start getting
Hmm.
active in raising and personally investing as well. That's one thing. The other is to start bringing advanced AI tools and resources to my clients, really advanced stuff that just along the lines that we've been talking about. So helping them to accelerate other aspects of their business to get ahead of their competitors. So those are two things, an AI thrust and also a direct investment thrust for the year.
Awesome. Those
Mm.
are those are two great goals there. Now, is there any roadblocks that you see, foresee with accomplishing those goals or
Yeah. Of course, the same roadblocks that everybody else sees. Exorbitant privilege of the dollar, inflation, Fed independence, the labor market, uh, geopolitical issues. I mean, there's what the heck's going on with gold and silver? I mean, it makes no sense at all, right?
yeah.
You look at all the indicators, got no idea. We're in a period of profound volatility right now. So the biggest challenges are navigating those uncertainties, frankly,
Yeah.
and hoping that. Well, hope isn't a strategy, so I'll approach that slightly differently. Approaching uncertainty with a clear focus on protecting the downside so that if there
Sure.
is a major downturn of some sort, and maybe there isn't, we've got midterms coming up. So there's a good chance that the economy is going to be super pumped before that. So everyone feels good, all right, before the midterm. So, yeah, but either way, there's underwriting to protect capital first and foremost, irrespective of what happens. So those are the challenges, the big macroeconomic ones.
Sure. And that just ties back to your original point, just being conservative, right? Not trying to project that 28%, staying consistent and staying disciplined ultimately, because compound interest is the best interest, right? So as long as we protect that downside, we should be okay moving forward.
Well, yeah, exactly. At least you'll survive the downturn and come out the other
Mhm.
side a lot stronger.
Awesome, Adam. Well, thank you for joining us here today, and I definitely look forward to getting this one in front of more people and continuing our discussion offline.
Thank you so much, Christian. It's a pleasure. Thanks for asking me to join you. I appreciate it.
You got it. Talk soon.